Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden secrets of corporate giants. This year's big filing from OneStream Incorporated looks like a treasure trove of information. So let's dive in. So we are looking at the big annual report. This is the 10K filing from OneStream Incorporated, the software company that makes the digital finance cloud, which is supposed to make the CFO's office run smoother. Think of it as a super smart assistant for all things money and planning in a business. This report covers the whole year up until the end of 2025, and it gives us a detailed look at how the company has been doing financially, what risks they're facing, and what their plans are for the future. But before we get too deep, if you appreciate getting straight insights from these complex documents, make sure you are subscribed. And hey, we have a Discord community linked in the description below, where you can connect with other finance enthusiasts and get even more insider info. This isn't just any report, it is the official annual report, meaning it is where the company lays out all the important stuff for investors and the public. It is like their yearly report card. Let's cut to the chase. The most exciting part of any report often comes down to the money, and boy has OneStream seen some action. Their class of stock started trading on the Nasdaq in the summer of 2024, which means they became a public company. This is a huge step, and it brings a lot more scrutiny and a whole new set of rules. Looking at the big picture revenue for 2025, OneStream pulled in $601.9 million. That is up from $489.4 million in 2024. That is a solid jump of about 23%. This tells us more and more businesses are signing up for their digital finance cloud. The company makes most of its money from subscriptions, and that number is looking strong. In 2025, subscription revenue hit $550 million, up 28% from the previous year. This is a great sign because subscription revenue is like a steady stream of income, predictable and reliable. It means customers are not just buying software once, they are continuously paying for it, which is fantastic for long-term planning. Now, their license revenue, which is more like a one-time sale, is actually going down. It dropped by 44% to $17.8 million in 2025. This isn't necessarily bad news. It actually shows they are continuing their shift towards that consistent subscription model, which is generally seen as healthier for businesses like theirs. Let's talk about profit. Their total gross profit, which is what is left after paying for the direct costs of providing their service, was $413.3 million in 2025. That is a jump of 33% from 2024, and their gross margin, meaning what percentage of their revenue is left as gross profit, is now at 69%. This is a really healthy number, showing they are efficient at delivering their services. However, even with the growing revenue and good gross profit, the company is still operating at a loss. In 2025, their loss from operations was $94.8 million. This is better than 2024's loss of $319.5 million, but it still means they are spending more to run the business than they are bringing in from their core operations. A big reason for those operational losses being lower in 2025 is a huge drop in equity-based compensation. In 2024, they had a massive $316.4 million in this expense, which likely relates to stock options and grants given out before and during their IPO. In 2025, this number dropped significantly to $115.4 million. This is a complex area, but essentially, it means a large portion of the reported losses in 2024 were due to non-cash expenses related to stock awards, not necessarily operational failures. After adjusting for these stock-related expenses, their non-GAAP operating income actually turned positive in 2025, reaching $27 million compared to a small loss in 2024. This non-GAAP look, which strips out some of these complex accounting items, gives a different picture of their actual operational performance. Now, let's look at cash flow, which is the lifeblood of any company. In 2025, OneStream generated $96.7 million in cash from its operations. That is a nice increase from $61.2 million in 2024. This is a positive sign because it shows the company's actual day-to-day business is generating more cash. When we look at free cash flow, which is operational cash flow minus money spent on equipment and buildings, it was $95.6 million in 2025. This is also up from $58.5 million in 2024. This number is really important because it shows how much cash the company has left over after investing in its long-term growth. Cash that could be used for debt repayment expansion or even future dividends. But here is where things get really interesting. The report reveals that in January 2026, OneStream entered into a merger agreement to be acquired by affiliates of HG, a big investor in software companies. This is a massive deal valued at around $6.4 billion. If this goes through, OneStream will become a private company again, and the shareholders will get $24 in cash for each share of Class A and Class D common stock. It is expected to close in the first half of 2026. Now about their stock structure. OneStream has multiple classes of stock, with Class A being the one traded publicly, but Class C and Class D stocks have 10 votes per S-share. This means a small number of people, including the investment firm KKR and their CEO Thomas Shea, hold most of the voting power. This concentration of control could be a point of concern for minority shareholders, as it limits their ability to influence company decisions. The report also highlights a bunch of risks, especially related to this pending merger. It notes that the process of being acquired can create uncertainty, affecting customer relationships, employee morale, and management's focus. Plus, there are always legal challenges that can pop up. And this report mentions a couple of ongoing lawsuits related to stock sales and the merger itself. They're also very aware of the competitive landscape. They mention big names like Oracle and SAP, as well as other players like Anaplan and Workday. Staying ahead in the software world is tough, and they acknowledge that competitors could innovate faster or have deeper pockets, potentially impacting their market share. Cybersecurity is a massive topic these days, and OneStream is clearly concerned about it. They detail their risk management and strategy, emphasizing their information security program and incident response plans. Any major data breach could severely damage their reputation and lead to significant liabilities, so this is a constant battle for them. While they're growing, they're also looking to expand globally. Revenue from outside the US was 34% in 2025, and they plan to invest more in international markets. This expansion brings its own set of risks, including currency fluctuations, different legal systems, and navigating international trade laws. Looking at the big picture, OneStream is in a growing market with a strong subscription-based model, which is a big plus. Their revenue is increasing and their gross margins are healthy, showing they can deliver their services efficiently. The upcoming merger with HG at a significant valuation suggests that investors see considerable value in the company's platform and future prospects. However, they are still operating at a loss on paper, which is something to watch. The huge drop in equity-based compensation expense in 2025 significantly masks the true operational performance, and while the non-GAAP numbers look better, the fact remains they are still investing heavily in growth. The concentration of voting power with a few key stakeholders and the potential risks associated with pending regulatory approvals for the merger are also important considerations. The company's strategy seems sound, focusing on customer success and expanding its platform's reach. But the real test will be whether they can translate this growth into sustainable profitability as a private entity under HG's ownership. Alright, that is our breakdown of OneStream's latest filing. What is your take on these numbers and what they signal for the company's future, especially with that big merger on the horizon? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives into your favorite companies. And don't forget to check out the Discord in the description for more exclusive content and discussions. Thanks for watching. See you next time.